Welcome everybody to today's episode of the Trade Recap series. Today we took two trades, one winner, one loser, and we'll dive into straight ahead about what happened today and talk about why today was quite an interesting day as well, because what happened yesterday played a large role in the action of today. So before we get into that, let's do some quick long-term analysis just so you have a quick idea of what's going on. Let's go before the market session started. Okay, so we had liquidity up at these highs, had liquidity here, had liquidity there, of course, but that was taken from yesterday's crazy volatility. We had liquidity throughout this up move, and that's essentially where we left off on NQ. On ES, how it looks is that it's essentially the same, right? We have liquidity there, these two, and we have this as well, but I didn't mark it because I don't think that within our market session we're gonna get all the way down there. And it's a 1 hour thing, and I marked everything on the 4 hour, which should be significant enough. But assume that there's liquidity there as well. It doesn't play a large role, but just assume that it's there for the purpose of proper charting and analysis. Now, from there, if you go down on the time frame and just look at simply market open, what would you think at market open when we open so green and we start expanding towards the upside? When you start expanding towards the upside, we automatically think that we're gonna head towards these very, very key liquidity levels. And I want to emphasize that once again. These are very, very key liquidity levels because yesterday we had a very big news event where essentially someone from Trump's team said that there will be a 90-day pause on tariffs, which were the reciprocal tariffs that I think that he recently said he would implement worldwide, right? And that was a factor for making the markets dump like crazy prior to this event. So naturally, when a pause is introduced, the market would push up crazily, and that was what happened here. This crazy push up was accounted to that pause. Now, this crazy push down was accounted to news coming out after that, saying that the 90-day pause is fake news by the White House, pulling the price down again. So now we're back to a negative sentiment in the market. We got faked out of good news into a negative sentiment, which already takes me into an idea that today we're going to go down in the market. And surprisingly, at market open, we didn't go down, but we actually went up, regardless of all the fundamental analysis news, right? Same with ES. ES is essentially the same, with tariff liquidity up at the highs, but at market open, we start pushing up. Let me remove this volume profile just so you understand. We had a short flush down and then an expansion towards the upside. So overall expansion around market open was up. Now, the same stands for NQ. As you see, we had a small retracement, but overall sentiment was up and we expanded up right at market open. Now, let's take a time to think, why did that happen? Well, what do we have above? We have our tariff liquidity. As any major news event, news liquidity is absolutely vital and absolutely essential to be taken before further moves happen. So in today, we're expecting the price to go down, but we're expanding up. That makes no sense, right? So you have to keep in mind that maybe we're actually going up to grab this tariff liquidity to get a good entry on the shorts. Think about what investors with lots of money that are actually moving the market are thinking. They want straight entry for the shorts, right? And what better place to get a good entry than from where the fake out happened yesterday? And that is exactly what happened. Now, let's take a look now into the two trades which we actually did, and then we can wrap it up with some recap on the market analysis once again. I'll understand that these sessions are a bit repetitive on what I have already said, but I'm repeating things so that not only I can further implement this into my head and truly repeat successful trades, but also for you guys to understand what makes a trade good and what makes a trade not good alongside proper market analysis. So now let's get into the trades. We took two trades today, one long, one short. Our first trade was a loser, our second trade was a winner. So our first trade took place around 9:30 a.m. Central Time. We saw that price made a retracement and we wanted to continue the longs from that area because on Bookmap we saw that liquidity was above. We were tapping into this barrier right here, and CVD was both green, supporting the upside. Now, unfortunately, we did get stopped on this trade, and although this overall reasoning seems good on top, there's a reason why it did not play out. First of all, this liquidity above is not major liquidity. It got created once our major liquidity, which was placed at 5,300 on ES, was broken. This started getting introduced. This is essentially add-on liquidity, while 5,300 liquidity was our major liquidity that has already been taken for the day. Now, if you look at when this liquidity was taken, barriers actually started to form above it, supporting movement from the further downside. But we were still in a long mindset because of the expansion towards the upside right at market open, and the fact that we did not quite tap into or break the tariff liquidity on NQ yet. That was another mistake. We tapped into it already on ES, and Bookmap shows that this major liquidity area was likely the tariff news liquidity. Now, on top of that, there was many seller icebergs getting introduced alongside sell stops being introduced as the price goes lower and lower. Now, if we actually come back onto this, the trade actually went our way for quite a while, but then quickly reversed. Realistically, we should not have taken this trade, additionally because point of control moved up straight to a level, and that typically means that we're going to expect choppy action because this is the area where the most volume is traded. It's an area in the auction where buyers and sellers can essentially exhibit equal or close in unison market volume. And typically in those areas, you either see choppiness or a reversal falling when the POC moves to that area. Now, we should not have taken this trade once again because on Bookmap, once we took our main liquidity, icebergs started forming, barriers started occurring, sell stops started introducing themselves, and because this liquidity above was just add-on liquidity, it was not meaningful liquidity for us to worry about. Furthermore, on ES, tariff liquidity and Bookmap liquidity, main Bookmap liquidity for the day, were taken, and fundamentals showed that the price is likely going to head downwards. And VWAP is towards the downside as well. Maybe it's a mean reversion and we head back to VWAP. But we took the longs, thus getting stopped out. Although the idea and structure in place was decent, we need to look at external factors like the overall market sentiment, the validity of these liquidity levels, the introduction of icebergs and stops, and the POC and other factors. Now that we understood that, we can definitely improve for the trades moving forward. But due to our risk measurement, this was a 2.37 risk reward ratio number, my bad, while we're only risking 150 ticks. Now in the next trade, we risked 200 ticks, but we're targeting 542 ticks, which is quite a significant amount of movement, while this we're targeting 350. Now, after this trade, our first trade, we saw price breaking through, shown by the analysis which I just mentioned, the POC, the barriers, the icebergs, all of that, right? Alongside tariff liquidity being taken. We started finding that nice breakthrough to the downside. VWAP is down here. Mean reversion is happening. Now, we start breaking through. There's no actual area where we can enter with confirmation, right? And from here to here. But then we saw this small fair value gap form. It seems small, but on a typical day, those types of fair value gaps are more than normal. It's a 50 tick fair value gap, which is not bad at all. We saw that 50 tick fair value gap form. We saw the next candle retrace to give an attempt to fill this fair value gap. And on Bookmap during that time, we saw price falling down, icebergs getting introduced, many barriers being introduced, especially this one right here. Our major barrier is right there, supporting that we can head down and touch this major liquidity at 5200 on ES, which we did mark. Now, if you look prior to this as well, when we broke to the downside, when the icebergs were formed, look how many sell stop orders were filled. This likely indicates that many people were still in the longs, right? But when we pushed down, it made them get stopped out, which essentially filled a sell order in the market, and that helped push price even lower. And there's more icebergs, more sell stops every time we go down, and that's very bearish. Now, additionally, when we start making our move back up, or when we start making our small retracement, quickly a big barrier forms, icebergs get involved, and there's liquidity below, and CVD has transitioned to being red. This is all very bullish, and it indicates that the selling pressure may be valid. Additionally, VWAP is towards the downside, which could stand as a magnet. And from overall fundamental analysis, remember what we did before we even hopped into the actual market session? We thought that price is going to go down because of all the bad tariff news and the fake out news we had the day prior, right? So we already expected price to go down, but price did not do that at the start. Now, when we started reversing, we had multiple confluences, including this fair value gap, everything on order flow, even on footprint, delta started shifting to the red. And once again, V2 levels have been coming in clutch, right? On ES and NQ, we broke our V2 levels, which indicates that this is a V2B play as well, a V2 break. When we break V2, we can technically continue down to the next liquidity level, which was essential to know as well. If you look on ES, our liquidity was right there, and right when we tapped into this area on ES to the barriers, we entered in, and as we move on, we rejected straight from that barrier on the touch. So many icebergs got added onto the market, 566, and then we saw price continuing to go to the downside, with major icebergs, major stops, with some buyer action, seller action, and overall liquidity and order flow was heavily to the downside. We eventually pushed down and tapped into our overall bookmap liquidity target, which we're aiming for, capturing 542 ticks on the market with a risk to reward ratio of 2.7, which is pretty good. And that's essentially it for the trades, right? For this one, we talked about all our confluences, same with the first trade. We talked about why the first trade had decent structure, but overall we misconcepted the market, resulting in us getting stopped out. We talked about what we did wrong in this trade. Additionally, we talked about understanding the overall confluences for our successful trade and what made this trade go right, with the liquidity and other confluences being below, alongside a sniper of an entry due to our bookmap barriers. So then that's essentially it for the day, right? Later on in the day, as you can see, we saw price crumble so much more to the downside, actually taking most of our downside sell side liquidity. Now, for the day tomorrow, it does look like we can continue lower, but we do have FOMC tomorrow, which is a day to be very careful, risk less, and don't trade when the actual FOMCs are running, and to be very careful in that day overall. It does look, looking at the momentum right now, that we can continue and sweep these further sell side liquidity to make lower lows, but we very well could reject. We just have to see what market open does tomorrow before making any significant trades. That's essentially it for today. We talked about what we did right and wrong for trade 1 and trade 2. We talked about the emphasis of overall fundamental analysis alongside technical analysis. We talked about the overall bias and understanding of today, how the market moved up initially, but that was likely to take liquidity above to have a good entry to further go down. And we talked about how we expected the downwards action simply based on fundamental analysis. That's essentially all I have here for today. I don't want to keep making these episodes longer and longer. I know that these episodes have started to get much longer than usual, but I'm trying to pack it with much more information than I did prior and make it a market analysis session alongside the trade recap session. So we did end up being a winner today in the market, capturing a net 400 takes, which is pretty great in the market. Now, that's essentially all I have here for today. I want to emphasize that using bookmap barriers and order flow and volume profiles and things behind the actual candlesticks allowed me to take these type of trades where you understand what's going on behind the market. I want to emphasize that by finding edge such as bookmap, order flow, and other resources, you can also succeed. But it's all about tying things together. If you can tie things together in a good way, you can make your trading look good. Think of it like an architect with many tools. Many tools isn't always great, but it can be very great when an architect knows how to tie everything together to make a beautiful property. Just like that, us traders can tie together many tools to make our trading look fantastic. We don't want to go overboard. We want to go one step at a time while introducing new tools. But when you do introduce new tools and perfect them, you can succeed a lot more. That's all I have here for today. If you have any questions regarding the concepts I discussed today, I know it can be quite a brainful, especially regarding all the new topics I've been introducing in the past few videos. But I can answer all those questions for you, and I'll be more than happy to answer them. Please leave a comment down below or join the Discord for any questions, more education, or variety of opportunities. And the link is in the description for the Discord, and I'll be happy to see you guys tomorrow for another market analysis or trade recap session. Thank you. Goodbye.